Hi, my name's Keegan and welcome to the Lending Alliance. On today's episode, I'm sat here with Paul Miliotis, who's the founder and director of the Lending Alliance. We're sitting down today for a bit of a market update as we sort of come into the spring, I guess, buying and selling season. Paulie, what's happening?
Look, there's a lot happening in the market at the moment. There's the topical conversation is the increase in interest rates yesterday from Westpac. That was a long time coming. Everyone was saying that the cost of capital has increased. The only reason we feel it hasn't come earlier was all because of that lovely Bank Royal Commission, and it was not very good for the bank's PR to be increasing rates during it. Westpac have obviously bitten the bullet and increased their rate. We feel that's obviously going to come across the banking sector now. So if you are with Westpac, I'd be just sitting tight and seeing where the dust is going to settle. The major four will definitely be looking to increase it, I dare say, in the next couple of days. For our clients, we've been looking at a mix of variable and fixed anyway in the recent past. You can still get really, really good fixed rates. So look, that should be on the agenda of people right now. If you can get fixed rates for your owner-occupied mortgages, high threes and low fours, early fours for investors, I think that should be considered. If you're paying mid fours and a little bit higher for investment right now, or after the increase, you really should be doing a review on that. What else are we seeing? Well,
look, I want to get your thoughts, obviously, just because, spring's only a couple of days away now, and typically that's the busy season as far as buyers and sellers are concerned. What's your sort of, I guess, your snapshot on how people should potentially get prepared for this time and just general thoughts on what you're going to see?
Look, there's no doubt anyone saying that the market's still hot is joking. It has definitely come off. There are not so many bargains to be had. But if you are ready, have your pre-approval ready. If you're going to act quickly, people want to sell. What we are finding, particularly in the dress circle of Sydney, is that there aren't that many properties for sale. So you have to be ready when you are ready. But yeah, there's definitely a softening, and people are saying, oh, well, we're finding our clients are actually finding something before they're selling. So we're seeing a lot more bridging, which, in my 15 years of operation, I've never seen this much bridging in my lifetime. But in saying that, there are lenders that will accommodate that. So don't be scared, but people are definitely getting ready, buying, and then selling. So that's kind of the shift that I'm seeing.
So I guess maybe just to sort of summarise and wrap it up for everyone, we've seen an increase, and it was, I don't know if you mentioned earlier, but it was 14 basis points, which in the scheme of things is not a massive increase, but was expected. Sort of hold tight and let's see where the dust settles across the board, because, Macquarie were first to jump a few weeks ago. Now Westpac of the majors has done so, and we probably think that the rest will follow shortly thereafter. On the increase, just one more thought from you, Paul, maybe just to fill in anyone watching this, because unless you've got your ear to the ground, you might not know exactly what it is. But when people say the cost of funds have gone up, what does that actually mean?
Look, the reality is it's where the banks are getting their money from. You've got deposit takers in Australia, you've got money coming from overseas. That's what they're saying. So if they're getting their money from the capital markets in the US, well, that's gone up. So their cost of capital is increasing. And the banks like to keep their margins. They like to keep their profits. So that's where we're saying it's moving outside the normal RBA movement. So when people say, oh, what's happening with the interest rates? Where do you think it's going to go? Well, we're having increasing of interest rates every week now, or not every week, but there's a consideration of upward pressure all the time. So whether the RBA increases it or not, I think is inconsequential. The banks are going to continue increasing it as the costs go up, and they're going up. We can see that in the yield curve. So be mindful of that. If you're tight, look at your fixing. Even if you're not tight, I think you can get a better bang for your buck if you fix a portion of your interest rate. Obviously, that's dependent on your situation, but it definitely should be on the agenda for everybody right now.
Perfect. All right. Well, look, I think that probably wraps it up for this spring update. I'll have both Paul and myself's details on the screen right now. You'll be able to reach out to us directly on both email or mobile if you have any questions. And I know myself personally received a number of emails from clients last night asking the question about these rate changes and what impact that is going to have for them. So don't be a stranger. Feel free to reach out at any point in time. And until the next one, thanks for tuning in, guys.